Welcome to the 6-5 podcast. I'm your host today, Daniel Newman, joined by my always esteemed co-host, Patrick Moorhead of Moor Insights Strategy. It's Monday, October 26th. You may be listening to this today, as we like to get these out live and quick. You may be listening to this in October of 2022. And if you are, call us and let us know what happens in the next couple of years or even weeks, because we have a few big weeks coming up. But it is Monday, and everyone that knows this podcast well knows that Pat and I tend to either do these early in the week podcasts or we will be podcasting on Friday. You could probably actually guess just by hearing how much we do or do not make jokes. Monday, less jokes. Friday, more jokes. Monday, less happy. Friday, happier. But anyways, we'll get on with it. Big week last week, Pat, in tech. Lots to talk about, lots of events, lots of earnings, hitting a big earnings season, starting to touch on it this week. We'll be more next week. But hey, before we jump right into the topics, how you doing today, buddy?
I'm doing well. I had a good, relaxing weekend. Time to kind of hit it and get it. I'll admit I kind of went ding last week on the amount of kind of pre-recorded events. It wasn't the events, it's just me. You know, I really want to get out, see my work friends, see people, walk around show floors. I might just go to Vegas and walk around the fake flow show floor, pretend there's an event there.
It's funny you say. I saw your tweet, got a lot of engagement. I think you weren't the only one thinking that way, but you may be the only one to say. And of course, based on the timing of when you say it, all the companies that we work with that put on events are like, "Oh, is it us? Did we do it?" It's like, no, you didn't.
I know. I had to go out of my way to say it's not you, man. It's me.
It's a byproduct of volume. I think over the last several weeks, I think I was attending 5 different events last week concurrently. I mean, and events are of different scales. Some are like these 1 day or several hour analysts. Some are like multi-day events. It's really hard to do days and days of events concurrently. But at the same time, I mean, these companies have to get their technology out. They got to get their stories out. They got to get their messages out. And as analysts, we have to decipher them, provide, the vision for these companies and what they're doing for the world that looks to us, looks for our analysis. So it's not a terrible job. It can be quite pleasant in a lot of different ways. But hey, let's jump in because we do have a lot to talk about, and we have a terrible habit of going long already. But for everyone out there, a quick reminder, 6-5 is 6 handpicked topics, deep analysis, minimal news. Our goal is to tell you about some of the biggest tech events, especially across enterprise, but sometimes broader tech in a given week, and to give you the skinny on what not only happened, but what it means. And a quick disclaimer, but this show is for information and entertainment purposes only. And while we will be talking about publicly traded companies, we will be talking about stocks, we will be talking about earnings, please do not take anything we say as investment advice. So let's start out with maybe the largest event by size last week, and that was Dell Tech World, Pat. And we both did some pre-briefings, and you actually had time to attend the event and spend a little time. What'd you think?
So all in all, it was a good event. I think the headliner on this was Apex, and that is Dell's kind of code name for its everything as a service, device as a service, software as a service, platform as a service. And with that, they announced storage as a service, and also announced a new cloud, multi-cloud and hybrid cloud console. And I think that's very in line with what we know that end users want, and also with a lot of things that other companies have announced. I think it is important to point out that Dell's recurring revenue is already $6 billion a year, and a lot of that is VMware. A lot of that is classic Dell. So they're not necessarily new to this. They might be, I don't want to say late to the game because it's so early, but they certainly were one of the last companies to throw the giant axe into the sea. But listen, that doesn't surprise me at all about Dell. I've been watching Dell since they existed, and typically they're not first to announce. They aren't. They're either middle or the end. What they want to do is create create the capability first, and then talk about it.
Yeah, that was a really big announcement, and I did have a chance to sit in on the pre-briefing, Pat. Look, Dell has had Dell Tech On Demand for a while. The company has been doing creative service delivery through flexible consumption models. This isn't truly new, but what is really new is the company is productizing this in a way that matches more the new consumption habits that the enterprises are looking for. Enterprises are looking to be able to go into a portal, spin up workloads, expand storage, add computing capabilities, upgrade networking, perhaps deploy different services, container tools for managing and deploying containers across their multiple clouds. And up to this point, on a managed service level, this was achievable. But in terms of on a control plane, I would give like HPE, for instance, with GreenLake has been earlier. They did GreenLake Central. They've done Aruba Central. Antonio Neri, and we'll talk more about this in a later topic, came out very early and said, we're going to do everything as a service. But at this point, you're talking about a little over $500 million in run rate sales and maybe a little over $1 billion in total bookings. So Dell's doing it at a larger scale, a larger volume, has a bigger customer profile, and also has a bigger portfolio in terms of what to focus on, right? The whole Dell technology stack plus the compute side. So HPE had the benefit of focus, had the benefit of going in early on everything as a service. But that's for example, Lenovo's playing in this space, Cisco's playing in this space. And of course, all the hyperscale cloud players are doing it from the opposite angle. They're coming into more of a hybrid as a service, whether that's Outposts from AWS, whether that's Arc from Azure, whether that's Anthos. And in a lot of ways, they're all sort of competing for this control plane, wanting to be the place, the location for users to go, be able to pick services across their IT enterprise stack and deploy. And so, like you said, Pat, I'm not surprised Dell is here now. The company's been talking about this for a while. It's not a brand new thing. And I think the most important play for the company is going to be getting that whole user experience right. Meaning that, when you do log into Project Apex and you want to deploy and see your environment, that's what a lot of the hyperscalers have done. I think that's what HP has been pretty good at. And that's what I expect that Dell will get right. And maybe with the extra time, that's going to be the outcome.
Yeah, it's interesting. Doing a lot of research on this, it was pretty clear to me that, even EMC was doing storage as a service before. And this new, I guess it's official. It's opened up to everybody, not on a deal by deal basis.
Yeah, absolutely. But no, an interesting event. You and I saw the same thing as the number one focus. It's going to be a big area to watch for the company in the coming months. And like I said, I think competition brings innovation. So I always like seeing more players in this space pushing the innovation, pushing the enterprise offerings, and hopefully delivering services that bring pricing down and capabilities up.
I don't remember how the last time I saw an industry focusing on the same thing. I mean, it's literally everybody wants to create the same thing. And then I think the big chat, like, what is it? One console, hybrid cloud, multi-cloud, spin up services, spin down services, manage them, secure them, move them around. Everybody is going for the same thing. It's crazy. So I think we'll probably sit here 2 years from now, and I'm doing some thinking about this already, is how do you differentiate in a world where everybody is creating the same thing?
Yeah, it's going to be a challenge, but I think it's going to be a combination. This is where CX and customer experience and all the hype about it is really going to make a difference. Who delivers that great user experience? Who's going to implement AI? Who's going to most effectively leverage data? Who's going to build the simplest tool? Who's going to provide mobility and flexibility? And by the way, automation is going to be a big play, right? Helping companies to automate workloads and spinning up additional resources and down, right? I heard these great analogies, Pat, about cars, and there's autonomous and then there's fully autonomous, right? And so right now, most people don't want a vehicle that's going to drive for you. They still want pedals and a steering wheel. And I think that's where we're at. I think in the future, though, we're going to start to see more and more with this kind of stuff. is we want IT to just run. We're going to want to take the pedals, the brakes, and steering wheel and let the system do what it does. But that's not where we're at yet. But that'll be one of those big differentiators, Pat. Well, good topic. Got to jump into the next one here. Intel absolutely got hammered last week on what I would call a very decent earnings report. And I say decent because they hit their numbers. Okay. Yeah. So anytime you deliver revenue and you deliver profit at the street's expectation, it's very hard to say anything, but it was a decent quarter.
Yeah.
But Intel has had this just crazy run of unequaled criticism and skepticism on the streets. It doesn't really seem to matter what the company does. In Q1 and Q2 of the fiscal year, it blew out the data-centric numbers, had huge server numbers pushed forward, and the street still was punitive. The company, without question, has had turnover. It had CEO turnover. It had issues with turnover now in its CTO and its technology leader of the company. It had delays last quarter that it announced on 7 nanometers that brought it down, even though its numbers last quarter were great. And this quarter is another quarter. It's kind of funny, Pat. I looked at it the opposite. It seems the company executed pretty well given the difficult circumstances. You got to remember, we had massive supply chain disruptions this year. We had coronavirus this year bring down China. You had a little bit of a bump that came from the CPU demand. But you had delays as they were in the middle of a process turnover anyway, right? As the company was moving to Tiger Lake in its 10 nanometer process for its CPUs. In this quarter, it actually delivered a little bit better than expected in terms of volume on Tiger Lake as 10 nanometer. The CPU business grew, albeit only 1%, which was hardly enough to get anybody excited. But what the real story was here is the data-centric business that had been a rock star the last 2 quarters got plowed. I think it was over 30% down, and the street was super unforgiving. The stock gave up, I think, over 10% that day. And I think now AMD got an upgrade today, another upgrade, and the stock, even though our market is getting hammered this morning, has actually been up. AMD has been up. And it's been a lot of which is because I think with Intel, it being the biggest, being the incumbent, and having had the troubles it's had over the last year, Pat, is perfection is the only thing that's going to please the street. So even though AMD's trading at like 80 times or 100, I think 100 something times earnings, and NVIDIA's at 80 something times earnings, and Intel's like a quarter of that, nobody cares. Everybody is basically saying if Intel does one thing wrong, we're just not going to forgive it for these mistakes. So, like I said, I think Intel's got a lot of work. They're going to have to continue to hit. They're going to need to be more accurate and precise. They're operating their process, and got to get data centric back on track. What were your thoughts on the earnings?
So I'm going to take what you said and take it a step further. I've been in and around Intel for 30 years. I was their customer, I was their competitor, and now I analyze them. And I'm going to not necessarily create a new law here, but I'm going to talk about one, and that is Newton's law of the stock market. The same rocket ship that got it up there is pressing against it. So let's think about this. People were going around Intel stock because they were completely dominating. They had flawless execution for a decade, and they got people hooked on this notion that a smaller geometry, the distance between transistors, the nanometers, the lower one would win everything. So now we're in where Intel isn't flawlessly executing. So think about the financial analysts who put their credibility on the line and made fun of companies like AMD and NVIDIA, right? So that same propulsion system that got it up there is now taking it down. And I don't think it's flawless execution, Daniel. I think it's going to be a combination of time and flawless execution. I feel like there's this half-life, which is, it played against companies like AMD where nobody believed a single word AMD said. By the way, I was a huge skeptic, okay, until they delivered millions of a part and made a lot of money on it, right? And then I became a lot more of a believer. I think Intel is going to have to show that they're directly competing with NVIDIA in graphics, gaming graphics, and machine learning training. Okay. And they're going to have to improve on their execution. I hope everybody's buying into the nanometer game that, by the way, Intel created. 10 from Intel and 7 from TSMC are very similar in terms of density and performance. In fact, if I look at what Intel actually has higher transistor performance, but it doesn't matter. It took 25 years to train people. And I'm not going to say it's going to take 25 years to untrain people. But right now, there's a lot of forces that are going against Intel.
Yeah, I think you make a great point. First of all, your tech know-how is good. A lot of people don't realize that 10 nanometer plus that came with Tiger Lake is very much the match for the 7 nanometer that AMD is touting with TSMC. And that makes it look on paper, and it's a very marketable thing that Intel's further behind. But when Intel 7 nanometer comes out, it would actually leapfrog AMD's current 7, but now AMD is pushing for 5. So you can see this race. But I actually think your best point in your analysis there, Pat, is that the company is going to be looked at very scrupulously for can it start to match and line up, right? You have NVIDIA making the ARM move. That's big. A lot of people are weighing heavily and putting bets behind NVIDIA, which is a very loved Wall Street gem right now, right? People just feel that company's on the right track, and $1 trillion valuation could be in its future. And now it has all this intellectual property for CPU chips that it didn't have before. There's a lot of weight against the company there. And then, of course, Lisa Su and AMD have been very consistent in execution. The street is given tremendous times earnings in terms of the value of the stock. But it's because it's gone in the right direction, though. I mean, given what you dealt with your tenure at AMD, totally different company, executing at a whole nother level, and has consistently put out products that people like. Having said all that, Intel still has 90+% of the server market. It still has the biggest share of the CPU market, and it's still a brand that your average consumer walks into a Best Buy or goes online, orders a CPU, and they say, what do you want? Now, I'm not talking about a gamer. I'm not talking about a graphics designer. I'm talking about the average productivity or home PC. Yeah. People say, I want Intel. Intel still has that, and the best thing the company can do is make sure over the next few years it doesn't lose that. All right. Let's jump into the next one, Pat. That's a great topic. I hope next quarter is going to be, strong in the company, which, by the way, just on Intel, it still plans to meet its year guidance that it gave at the end of Q2.
That's raised it a little bit. It raised it a little bit. It raised it a little bit.
Yeah, I mean, the 75 billion or so that it's targeting, though, it's showing that it's still going to hit that. Like I said, I think sometimes some stocks just there is no mercy. We talked about Dell first. That's another one that gets no mercy. I just think some companies get a lot of slack, and some companies don't get any. And Intel's definitely one of them. All right, let's talk about another company that has a tenuous relationship at times with investors, but does some tremendous innovation and is touting those innovations right now. In fact, last week, Qualcomm did its 5G summit, Pat.
Yeah, so 3 things stuck out for me. First off, we're seeing it very quietly get into the 5G infrastructure market. And I think there has been a lot of an opening, primarily led by Huawei, but also some other companies out there that are kind of crumbling in that space. And I don't usually say keep your eye on this, folks, as we move forward, but keep your eye on what Qualcomm is doing with RAN. And for those who aren't familiar, RAN is Radio Area Network, and these are essentially the silicon that goes into the boxes that your cell phone has to connect to, your 5G cell phone. Nokia is having issues. Huawei, we all understand their global challenges that they're going through, and I think it's an opportunity. Gosh, we even saw Pat Gelsinger from VMware get on stage and talk through that. Talk about 2 heavyweights. And if you remember, if you followed VMworld, VMware had a major carrier announcement in how they were doing vertical solutions for the carriers related to RAN. And on good old 5G phones, I think Qualcomm has shown that they were right with that initial, was it 250 million units by the end of this year? Looks like they're headed there, particularly a higher level of confidence with Apple going all in on every single one of its new phones. And they threw a major axe out into the sea that I caught a little bit of flack for and some challenge, which said, Cristiano said in 2022, the industry will have shipped over 750 million 5G phones. It's a long way away, but remember, the entire industry only ships a little over like 1.1 billion handsets a year. But full steam ahead for Qualcomm. 5G is ahead of 4G. The devices are ahead of the carriers, at least in the United States, in my opinion. I got challenged by Durga Maladi from Qualcomm in my interview with John Fort, but Durga had a great point on here. But I think the wind is finally behind Qualcomm's back. As I look at all the challenges they had with the failed hostile takeover from Broadcom, what looked like every single one of these regulatory bodies on them, their biggest company, Apple, stiffing them for years and not paying them. Did I miss anything of any big controversies that they've been part of? And now they need to monetize 5G. They need to lean into their automotive. They've shown that their RF business is very similar size to the pure plays, like a Skyworks, which not too many people are talking about. And gosh, we even saw action in ACPC. I've been a little frustrated at the take rate and the amount of investment on the marketing side from an industry point of view. But one of the very hidden announcements there was that, first off, they hired an industry stalwart salesperson from Apple, and they've created an enterprise sales team. They're creating channel programs with deal registration. They're increasing their go-to-market relationships. And it's like, oh my gosh, that's exactly what Qualcomm needs to be doing to drive ACPCs forward.
Yeah, you covered a lot of ground there. I mean, look, the units of 5G are growing quickly. Apple's announcements over the last couple of weeks, love Apple or hate Apple. When Apple says something's legit, it instantly becomes more legit. And the U.S. smartphone market is massive. Of course, Asia Pac and the U.S. lead the world. But when it comes to devices sold in the U.S., Apple will generate a lot more shipped 5G units. It's just a simple fact. That's how it goes. Other areas you mentioned, automotive. Of course, you talk about drama and turmoil. Pat, you forgot NXP deal falling through. There's one that was drama.
There's so many opportunities.
And, being pretty much either sued or dealing with some sort of regulatory battle with every FTC on the planet: TFTC, KFTC, JFTC, CFTC, and then of course US FTC, which by the way still isn't fully over yet. That's something that some resources could be spent elsewhere on. But anyhow, so yeah, hearing this, of course, enterprise 5G is going to have a huge play. And Qualcomm's getting into that space in a lot of different ways. So yeah, Pat, there's a lot going on there. I think the directionals are good for the company. 5G is picking up momentum. It's been a little slower, I think, than we all had thought, and COVID has slowed it a little bit more. But at the same time, talk about what's going to keep us connected infinitely forever, no matter where we are, no matter where we have to work. 5G's got a lot of potential to a remote workforce of the future, higher reliability, greater security. You couple that, with our home networks, and people will be connected and be able to do pretty much anything and everything they could do in the office from anywhere they are on any device that they have. So positive for Qualcomm. Of course, another virtual event. And we'll talk about two more of those before the show's over. Got to keep moving though. Another earnings last week. IBM's been kicking off the big earnings waves quarter after quarter. Last week, Pat, we talked about the spinoff, and there was you can't really talk about the earnings there without talking about what the company had just announced in terms of a spinoff. The company stock took a bit of a hit. revenue declined again for a third consecutive quarter from an annual standpoint, but the company did hit on revenue and earnings based upon the street's expectation. Now, the street's expectation has been largely set by itself because the company had stopped providing forward guidance after that first quarter with COVID. You got a new CEO with Arvind Krishna in there leading the helm. Definitely the ambition is to turn it into a cloud company. That's been the ambition. That's the reason for the sell-off of its managed infrastructure services at the end of 2021, almost 20 billion in revenue. But that 20 billion, close to 2018 plus, has largely been at a decline. That business is in a late stage. It's a declining business. It was down again, mid-single digits, dragging the whole company. So let's talk about where the strengths are, Pat. Cloud grew, the cloud and cognitive, which is another kind of bundled up group that includes a bunch of different products, 6%. The real excitement, though, comes down to Red Hat. Red Hat, once again, saw almost I think it was 16% up, 25% up in bookings for the quarter. And this is where the company's going to have to play. I feel, Pat, that the growth of the company, especially this growth of the stock price, will come when it starts to see growth that's more proportionate with its competitors in across the board. And the competitors, I think, that they're targeting are more your big cloud players. On the slower monolithic type growth rate, it's going to be more your Oracles, is going to be where it's competing with. But on the true hyperscale cloud, it's going to be your Googles and Microsofts and Amazons. And those companies, even as they've hit law of large numbers, are still growing 30% in the cloud business. Microsoft's still growing close to 50%. And IBM, even with Red Hat at its peak, is really hitting only about 20. I think the street would probably forgive some of the slower growth portions of the business from IBM if its cloud business started growing 30, 40, 50%, because that's the only way you're really going to start showing any tracking and catching of your bigger hyperscale cloud providers. I do think the company's doing a lot of things well directionally. It's focusing in on being an enterprise cloud. It's not really trying to be the cloud player for every little cloud app and startup that's building. It wants to be the cloud for banks. It wants to be the cloud for government. And it's tapping into its deep experience with mainframe, with Linux, of course, with the Red Hat and OpenShift to be able to do so. But as a whole, the company, has to deal with GTS being a lag, GBS being a lag. Effectively, systems is a super cyclical business, Pat. I know you work really closely with them, but that business had some great momentum when Z15 came out. But after Z15 hit its cycle this quarter, it was a big drag on the revenue this particular quarter. But in order to get to where I think the company needs to go, it needs to show that ambition and that growth, and it needs to do so mid double digits in cloud is what I think. Mid single to low double overall growth after the divestiture. And Pat, and something I think you will co-sign on with, has to be a company that's delivering a satisfying and exciting product to those enterprise customers. Meaning, I think if they deliver to the customers, the growth will follow. And that's what we need to watch really closely.
Really good analysis, Daniel. And I'm trying to think where I can add in there. I mean, I am very happy with the Red Hat performance. I think it's important to point out, very similar to Red Hat, is they have a lot of on-prem business, right? And getting growth into that 30, 40% on cloud with a customer set who aren't exactly what I call the first movers is going to be a challenge. I'm wondering if GBS gets ejected at some point down the road. I mean, if they want to be looked at as an AWS or an Azure or a Salesforce, I'm wondering how this happens. So far, I'm impressed with current management, and I feel like that the current management team kind of knows what they have to do, and it could mean a lot more change in the future. And I hope that if that's the case, they make it and they do it quickly and they don't break the company in the process. I've seen companies do things for what Wall Street wanted and not customers wanted, and destroyed the company. Look at GE, at where they were 10, 15 years ago. They created their company to be a Wall Street darling, and for a while they were, and it worked out until they were no longer the darling. And they started to jettison assets to stay in business.
Absolutely. And Pat, you hit it on the head. That's why I ended it with customer has to still be first. And I feel that that's the focus, as being that enterprise cloud company. All right, we only got about 8 minutes, and we got a couple topics left. I'm excited about both of them, but I'll let you run in on this first one, Pat. We attended an investor event from HPE. So we started talking about them when we talked about Dell, but HPE did an interesting investor day session. I saw you covering it across Twitter.
Yeah, so I have attended the last 4 or 5 security analyst meetings, aka SAM, and it's essentially HPE's call to the investment community that says, "Hey, you should invest in us." And if I look at the market cap of HPE is around $12 billion, Cisco's at 170, Dell Tech's at 50, and you're like, what's going on here? Sometimes, we put the companies up as equals, but in the market, they're not. And for right now, the market yet doesn't understand exactly what HPE is up to. And what they laid out was, hey, we have some compelling trends that are behind us. 55 billion devices by 2025, 90% of enterprises using hybrid cloud. A lot of good stuff that I agree with, and they are early with things. They are showing velocity at what they're doing, and essentially that was the call. And I think they did a pretty effective job doing it. I think kind of like IBM, they're going to have to show kind of deeper double-digit increases for people to get even more excited about the stock.
Yeah, you hit it a lot of it well, Pat. This was an incremental event on our end as industry, but it's always good to sort of hear the tie between the street and the industry and the product. We've been very close to what the company's doing. You heard me talk about earlier when we talked about Dell. I feel like Antonio really did pick up the right track with the everything as a service model. HPE needed a differentiation. The company saw the writing on the wall, saw the way infrastructure as a service was being consumed and adopted, and the excitement about Google and Amazon, AWS, and Microsoft. And the company realized that while 2/3 plus of workloads still live on-prem, there needs to be a good solution for on-prem, and that as more and more companies are moving to multi-cloud, there needs to be a good solution for that. That's where HPE is heading. That's the strategy. Antonio's sticking by it. The stock has not necessarily bounced yet. It's still sitting at about $10 a share. But I think long term, I mean, this is still HPE. This is the core part of that business. And I think if it executes, it could be a very promising couple of years ahead. Now, reminder, we're not making any stock advice here. This is not, we are not recommending anything. We're just simply saying the investment itself seems to be on a trajectory where the company has a real strategy, a real plan, and it's differentiating around being a company that can deliver anything and everything it builds as a service. So, Pat, let's jump into the last topic. Splunk.conf. This is the one that I headed to while we were dividing, conquering the world, and trying to attend as many millionth tech events in a single week as possible. Splunk, the name itself always raises an eyebrow. People are starting to hear more and more about the company. Focuses on really 3 areas: IT, security, and observability. And I thought it was a great. I spent a lot of time focusing on what Doug Merritt, the CEO, by the way, keynote at our Big 6-5 Summit. Really smart guy. The company's in a massive transformation to cloud. And that's the biggest focus that he really brought in this, is that as all this data gets created, there has to be a wrapper around all this enterprise technology that we build, and a way to see it, a way to interact with it, a way to automate it, a way to streamline it. And that's what Splunk's really doing. So he talked about 3 transformations that the company are making. And so I'm just going to briefly touch on what those are. The first transformation is the company is really seeking to become a world-class cloud provider. Now, for a long time, it was based upon data ingestion. The amount of data that it was managing was how you paid for it. The whole business model has changed to be workload-based cores. You pay for it the way you pay for other, a lot of other prem-based cloud service, like we just talked about. And the company made a couple of really interesting things, but it is actually the fastest growing annual recurring revenue growth compared to all other cloud services. It's growing faster at its current size of $2 billion than ServiceNow, Salesforce, and Workday. So it's growing very, very quickly. It's in a very good position. The company is changing to be more cloud focused. So as I mentioned, it's moving to offering compute and storage separately. It's offering an elastic stream engine, so you can real-time stream process all the technology. And by the way, it's partnering now with AWS and Google Cloud to start being able to deliver it in, as a service in public cloud. The other thing that was really interesting too is of the top 10 public cloud companies, and they were showing this, the company had 89% growth in its cloud business in the same period that those companies only showed 48%. So the cloud transformation has been impressive for the company, Pat. The other thing I would say is his other two transformations is being, one full data to everything platform. This was a big one, and we don't have enough time on the show to talk about all of what this means. But essentially, stream processing, machine learning, federated search and analytics, collaboration, orchestration, and full observability. This essentially means that now with Splunk, you can do cloud infrastructure monitoring, log investigation, app performance monitoring, digital experience monitoring, and DevOps incident response. It's really becoming a full turnkey solution to do everything with all your data that wraps around your cloud. And the last thing was its entire way it charges customers is changing. So like I said, we talked about it becoming cloud and also being a consumption-based tool. It's
Right.
mapped that. The uptake on this has been really good. The long and short, Pat, is Splunk is on a great trajectory. It's growing fast in size. It's growing faster than some of the biggest names in tech. And that is because with the volume of data, companies are investing big on making sure they can manage the data, automate responses, secure the data. And so I was pretty impressed with the keynote. And what I was maybe most impressed about was that Splunk is so technical to most people. He did a pretty good job of backing it in and helping these things make sense to the average business mind.
Yeah, I think you hit on a spot one. That's great analysis. So at a 50,000 foot level, the new strategy makes sense to me, right? You take something that people are hooked on, you add value added services around that don't necessarily have to be best in breed, and you move on from there. If there were one piece of advice that I would give Splunk is the need to dumb it down for certain people. The broader they get with their portfolio and their offering, they need to better speak to their audience. In some way, it's some less informed people. My nephew got his job where he is today, running a manager at Nationwide Insurance for security because he knew Splunk at Ohio State. Right. He's an uber nerd, but and there's still a lot of money from folks in IT who have the money, but kind of spreading the wealth, spreading the message to a larger audience, I think would bode them well in the future, not only for their customers, but also for their investors.
Absolutely, Pat. That's great insights, and I look forward to getting more as you get more engaged with Splunk. We're actually doing a really great interview series, Insider Edition of 6.5 later today that will be out with the head of GreenLake and one of Splunk's heads of their partnership. So that'll be a great show, Pat, and we'll both get more in depth on some of the things that the company's doing in cloud. For this episode of the 6.5, though, it's time to say goodbye, Pat. Great stuff, man. This is going to be a big week. We got earnings, Microsoft, Amazon, AMD, and more. And we've got events, and we've got so much. Cisco's got Partner Summit. Lots to talk about. But for this episode, we got to say goodbye. Hit that subscribe button. Join us again. We'll be back every week. The show keeps getting better. At least we think so. But for this episode, time to say goodbye. See you later.